Hello, everyone, and welcome to the weekly roundup. Today, we will cover interest rates, inflation numbers, and market direction. Hello, Ben.
Hi, Eva.
How are you doing today?
I'm doing great. Friday of a long weekend.
Yeah, Thanksgiving.
That's right.
Awesome.
Yeah.
Okay, let's start off with inflation. How are the recent numbers, and do the numbers impact the interest rate direction both in the US and Canada?
So it's a great question. I think inflation and employment together have really been the two drivers of a lot of the attention going on as to what's going to happen with interest rates in the two countries. So the inflation numbers were a little hotter than expected. Um, and um, and the employment numbers were a little better than expected as well. So it's a pretty negative for if you're of the view that you think rates are coming down super aggressively. So mostly in the US though. So we had jobs beat and we had inflation a little hotter than expected. So where probabilities of a potentially another 50 basis point cut in the US were increasing. Now it looks like only 25 basis points. The next central bank meeting in the US is a couple of days after the election there, so that'll be interesting. But certainly that's happening there. In the US, really interesting the kind of mixed views around what's happening. I think in one of the dailies this week, I put out former Bank of Canada governor talking about how Canada has to go 50 basis points this month. So market's not pricing that in. Market's only pricing in 28 basis points right now. But there's some that think more will come. And it's really irrespective of inflation and jobs in Canada. It's really directly related to what's going on in housing and the challenges that the Canadian housing market's having.
I saw some news on new housing policy, and tell us a bit about it.
The CMHC
Yep.
changes. Yeah. Yeah, so it's quite material. So they changed it to allow you to have CMHC coverage. So that's effectively insured mortgages
Yep.
that the government of Canada backs. And they extended duration out 5 years. They've reduced the down payment. They've increased the amount that you can borrow up to $2 million. So it's pretty material actually. So especially as we're trying to get more multi-builds and more people converting properties into multi-units. So I'd say it's quite material because Canadian banks look at CMHC mortgages as risk-free for them. So it's quite a material change. It'll be interesting to see how it evolves, what approval processes are like, and things like that. But at the surface, it's a pretty big change.
Right. All eyes on China's fiscal policy updates. Any insights on this? What is the market expecting?
Well, I would say that how the stock market's reacted to what's going on in China right now, pretty negative. We had that impulse, right, where we saw markets rally 40%. We've seen, kind of 25% of that given back right away in the past few days, with maybe an overarching fear that fiscal won't come as strong as expected. So, of course, China likes to release their information on the weekends. So tomorrow we'll see China's fiscal policy update. So that could have a pretty big impact on what's going on next week. Shortened week in Canada, not the US. So Monday Canadian markets close, but US will be worth paying attention to. I think that there's a high probability that the fiscal response is more than expected right now, priced into the market. But we'll see because the Chinese economy's really struggled to get out of their doldrums and transitioning from manufacturing based to consumption based is choppy. And they're in a position where they really need to put their foot on the gas if they want to get GDP growing again.
Right. Speaking on markets, there was some volatility in the commodities market with oil prices and gold as well. Any drivers?
Yeah, so gold, I think, is the kind of the same story, more of that kind of stagflationary story, which is inflation still here and growth is stalling. So I think that continues as well as the central banks of the world responses is to print money and cut rates, which ultimately devalues your dollar. So you get some more money flowing to gold that way. Central banks of the world have been huge buyers of gold over the last 18 months, and they seem to continue to be so. As for in energy, oil and gas, I think it's a little bit mixed. I think we probably bottomed early September, which we talked about in that area, and now we're seeing a reacceleration. There's not a huge, I'd say, war premium built into oil and gas right now. So if we did see any of those things happen where, Israel decides to bomb a Iranian oil facility or something happens in the Ukraine, so that's not really priced in right now. It's more priced into what's going on with the global economy. And so we could see a shock to the upside. Presently, not really trading it, more from the view that we probably bottomed, decent time to think about owning the space. And if something, material happens in the world, you could get a pretty big spike, but it's something to pay attention to and watch for sure.
Right. Anything else catch your eye this week?
So Tesla had their earnings last night, so that's interesting. If you looked at that, followed it, Musk is doing a million different things, and Tesla is really evolving. They came out with their vision for their robo taxis, which look pretty cool if you like that kind of futuristic thing. And I've never driven in a driverless car yet, so that would be interesting. But so he's doing that, and the robots that they're test casing, they're saying this could replace servers and these types of businesses, bartenders, things like that immediately. Thinking forward, I think it's interesting because ultimately that's pretty deflationary. Longer term technology is. So that caught my eye to say this. He continues to evolve, and certain parts of his business are funding the future development of things that he's working on. So it's worth paying attention to for sure.
Okay.
Yeah.
Did we make any changes in portfolios this week?
So not this week. So I'd done last week, we did the China to Brazil. So I did consider looking at adding to Brazil, which I haven't yet, because that would be a bit more of a play on energy. So I still like that idea and may look to add to it. The switch out of treasuries to corporates is still in the works, trying to find the best solution for that and anticipate that happening pretty soon, but didn't make that move en masse just yet.
Yeah. How about we go into the charts?
Sounds good. Okay. Okay, October 11th, here we are. So this is just a little bit on inflation, so certainly still worth tracking. So this is the US core services less housing, so they call it their super core CPI. Just give you a gauge of where we are because we're looking at the kind of the year over year numbers, which we continually look at, and they include everything. Supercore strips out a bunch of volatile asset classes, just to give an idea that prices are still elevated, and pricing pressure is still elevated in a number of areas. So we haven't come back to, the previous 10 years level, which was that below 2%, at least below 3 for an extended period of time. So it's something certainly to be watching, and it's affecting bonds and obviously also affecting expectations of future cuts. So certainly still worth paying attention to. So some of the areas, if you look at where pressure is inflationary, I thought this chart was super interesting just to see that, education costs have been rising throughout the United States, so there's been pressure there. Administrative staff has increased 95% since 2000, where the number of students have only increased 5%. So it's certainly higher prices are being pushed up based on a number of things that are happening in the US. Lots of lots of predicting, voting, expectation of who's winning, who's not going to win. And the US elections are extremely complicated, as always. So this one jumped out. This is, I think, RC Vote, one of the polling stations with the expectation of Trump leading presently. So we'll see how this evolves. Two more quick charts, and I think where I've spoken about this a number of times, we haven't discussed it recently, but I thought this was a great breakdown of the amount of natural resources that go into electric cars. So certainly, I think that it's interesting, and there's a lot of attention going towards the electric cars, but also makes me think about what are the likely assets that are worth paying attention to, particularly as we move more to the electrify. And so this gives you a breakdown with graphite. Well, there's a lot of graphite in Canada, graphite and graphene. So some graphene mines in excuse me, in Canada, one Nouveau Monde, which we've looked at, aluminum, nickel, obviously copper, hasn't been a big copper find in the world in an extremely long period of time. And so these are all the different key minerals that go into electric car. And I thought this was a great chart that shows the amount that you need in order to get the cars going and keep the batteries functioning and so on and so forth. So when Elon Musk was purchasing Twitter, one of the reasons, and probably the key reason he's done that, he said, is so that he can continue to give a voice to freedom of speech. And so if you look at what's happened over the last number of years, this one jumped out at me, said, what's happening in America today is something darker than a misinformation crisis. And it really is the amount of information that you see out there that's manufactured or controlled. And there's a number of US governors and senators that are trying to change the rules to allow themselves to control and manage what comes out into the system. And so, Trump had bought Twitter, or sorry, excuse me, Musk had bought Twitter with the view that he wants to keep it as that public square where you can say what you want when you want without it being curated outcome. And so freedom of speech, I think, is interesting. And it's certainly under pressure. This article from The Atlantic, if you follow that paper journal, great information piece just around the misinformation that's going on in the US right now. I thought it was unique and caught my attention. That's it on the
Interesting
charts.
charts. I feel like I can build an electric car now.
Exactly.
Great one.
Yeah.
So what's on the agenda for next week?
So I'm going to do one more screen share because I think it's always,
Sure.
when you ask me just about what's going on in the world next week, if people are looking to try to understand what's going on in the economics and information coming out, this is a website called Trading Economics, and it has a lot of great information around inflation and interest rates and so on and so forth. But this is just a view at the number of data points that come out any given day. This first couple of scrolls. This is all in data that came out today. So PPI, CPI, Canada, US, Denmark, Russia, Mexico, Italy, Indonesia, India, Great Britain. And so there's a ton of stuff coming out, obviously next week. But to the earlier point of our discussion, China comes out with a bunch of data this weekend. And so on Saturday, fiscal update, inflation update, and then on Sunday, M2 update, which will also be very interesting and worth paying attention to. So I'd say those would be the key things to look forward to this weekend, and then shortened week in Canada next week with the stock market closed on Monday and bond market closed on Monday. And so I'd be watching to see if there's anything going on, if we need to react to the markets on Monday. But for the most part, it'll be what happens, what does China do, what do they put out, and then obviously a ton of other data to come out next week. And we've also started earnings season for the S&P. So we had JP Morgan out this morning and Wells Fargo this afternoon. So tons to pay attention to next week is the answer.
Lots to look out for.
Yeah,
Okay, great. Good one. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. And for everyone, please visit, subscribe, follow us on YouTube, LinkedIn at Hart Investment Group. Also, our daily blog, Daily Heartbeats, for more financial news and analysis. Thank you for watching and have a great Thanksgiving weekend.
thanks. Take care,
Bye.
everybody. Thanks.